All right, I want to do a little TA on Clover Health because I seen it drop like below $1.80, and if you watched my last video, you would have known that you see how these are fair value gaps. There was one big one right here, right? This pretty much was like the line in the sand, right? There was a line in the sand, and this is where shit hits the fan. It's either we're gonna be here, and hold this area for accumulation, or it was never accumulation and there was always distribution. But the next level, if we look at the weekly, all right, try to find like something significant on the fair value gaps, which is one right here. That's going to be at around $1.35. Um, you could probably say this one and that one, and really get down to like $1.25. So, but anything within this region of what is it, $1.50 to $1.28. But I would say anywhere in the $1.20 region would probably be the level. But then that means it would have to absorb the fair value gap. Um, and then these things typically are a structure for bulls or bears, right? They're like support and resistance type of scenario. Um, at least that's the way, me analyzing it. This is what I've come across. Since this one is greater than these others, other than this one right here, which starts off at around 81 cents and ends at 71 cents. Other than this one is this one, right? Because before we had the 180 fair value gap, which was pretty, pretty big, similar to this one. These other ones are kind of small. I don't know. The importance of them might not be greater than this. So if we are in distribution, right, on a timeline in here, that would say about before it starts really amping up at the longest time frame, which probably would be in June, but the shortest one would probably be in the middle of May. At least that's what using a form of psychoanalysis suggests with the trend that it currently has on the weekly chart. So, being said, you can see these blue and the light blue, right? These are it's kind of like bottoming zones, right? You got a lot of them over here and a lot of them over here. You have this huge divergence on the weekly, right? Um, which led to that. So, what I'm looking at on the weekly is a couple of zones. Now, let me change over to this chart. Now, this is my other psychoanalysis chart. It's one of the originals. It's a Hertz psychoanalysis. Um, from trough to trough, then you have the minor troughs within the greater trough, right? It's like always. And we seem to be coming to a conclusion on the minor trough. Within this accumulation, well, we could call it that if it works out to be that. If not, then it's distribution. But this is the possibility of accumulation, right? Because this is the institutional buy signal. You had one here too, when it kind of bottomed out at like, was that $2.13 or 15 cents or whatever. So, and then you have the trough come to an end, the dominant trough, right? Like you had it here, and then you had it here, which kind of like offset a little bit. I had to change it slightly. I could probably, adapt it, but nevertheless, this is the zone that we're looking at with the minor trough. The center of it's going to be May or March the 27th. And then there's like a window of opportunity. That's what these yellow lines are. It's a window of opportunity. This is where it could form a bottom, or you know, it could be just going sideways. But kind of like how this one did, it's pretty much just went sideways and it went down into the trough. And if it's really bad, um, we can see it go sideways, pop up a little bit within this rising cycle over here as well, in the rising part of the dominant cycle, and do the same exact thing it did here with it slowly moving down into some other support zone, right? We already talked about a fair value gap that exists on the weekly right here at, was it, $1.40. I'm going to say that $1.40, give or take 10 cents for margin of error, right? Um, Top and bottom. So we have that. Now, the time frame was the 20th through the 6th. So it's going to be March the 20th through the 6th. There should be some type of consolidation, some type of movement that goes up from here, using this. And previously on the last video, I was using my wave tech on the daily, so for indicators or whatnot. So let's go to the daily. Let's take a look at that. Um, so first off, let's just look at the point of interest, which is right here. Right? So you have these bottoming signals go off, this blue, right? This is also a bottoming indicator. This is like green and light green. And then you also have like this minor low zone that pops up, which is not as significant as the blue or the baby blue. Baby blue is probably a little bit more significant than the darker blue. So then you got all this fucking outflow, like extreme outflow coming up from here around March the 10th, and it continues to happen like it did here, right? So it started off, say, like February the 4th, and then it kind of came to an end on February the 19th, right? All this outflow, right? A lot of selling pressure. And we have that coming up here. Now, as far as my timing on how I created these two yellow lines right here was with this wave tech indicator. It looks like it kind of spit it out a little bit further now because it adapts as you go, right? So more data you get from the price action, the it's going to make a shift. It's not like this one. Like this one right here, this is pretty much as is. It doesn't really move often. If it does, it's only a few days or weeks. If it's on the weekly chart, daily chart, a few days to the right, a few days to the left, right? Just to calibrate a little bit more because money tends to move around in a different rate. At least that's what I call it. So, anyways, over here we have these signals. This is like a bottoming signal, kind of like how this zone is like a bottoming zone, or it could be a distribution area if it doesn't hold, in my thesis, what I'm looking at, right? So there's multiple indicators that suggest like, something important, like this one right here, this one right here. When you get them stacked together, like you get the baby blue, the light blue, right? And then you get like this green one here, and you get something else, kind of like this little dot there of buying. You got one here of selling, right? You got two selling ones here. You know, it's all discretionary. So you got to know what the tools that you're working with in order to determine, how you interpret it. So you have to like pretty much understand your TA uh, flawlessly. Um, I like to adapt my TA. I like to continue adapting it as I go until I find something that really sticks. It become my TA becomes really sticky. And once it becomes really sticky, then probably not going to adjust it or adapt it to any or try to create a different outlook for it. But until then, it's all about calibrations. So you have one here, right? You got two of them, three of them technically, if you want to say. There's green, there's blue, and there's baby blue, right? Um, as well as some other stuff going on there. You got a divergence here. You see it here to here, right? And then you had this accumulation, right? Late stage accumulation clicking in right there, right? And if this is accumulation, then at this point right here, this would be absolute late stage accumulation because you can see I got a blue and I got a baby blue. The blue is more driven to the chart itself, whatever, have it on the weekly, daily, monthly, whatever. It's driven to that. But this one is driven into certain time frames, right? And I have to calibrate it correctly in order to. In each stock, each asset, everything's always going to be different. It's always going to be a different story. It's not one size fits all. It's not a a one stop shop. These things have you have to calibrate them and you have to adjust as you go because they're all treated differently because they're not all running on the same you call it algorithms or the same psychoanalysis or the same fundamental analysis or whatever. They're not all the same. They're all unique in their own way. So, but with Clover, we can see some type of pattern go developing, right? Um, so we have this huge divergence there, and then it failed it and went lower. So what that tells me is that it's going to roll this divergence over onto a higher time frame, which would probably be the weekly, right? I know I got a lot going on over here, but if it does roll it over, which it really, yeah, I don't know. Let's see here. There's a possibility, but this week is the make it or break it. Let me double check that though. Okay, so it was here. It's the last one. This is gonna be August the 4th. So we go to August the 4th, which is here. So we go to there. No, it already busted it. Well, there's a lot of selling pressure on the weekly, as it was here, here, and here. So, well, there went that divergence idea. Let's go to the 2 week. Let's see, we create one there. Nope. I guess it gets out of hand after that. It becomes more to create a divergence on that one. It just takes more effort. It's going to take a longer time. Um, Time frame is higher. So, what I'm looking at now is let's move this to the daily again. Okay. So you see these white ones here and here. Now these ones are with the Hertz psychoanalysis here, which is the 20th, and here, which is the 6th, right? On the minor time frame, which right here is the 20th, and right here is the 6th, right? So this one was on WaveTech. That's how I created this, as well as other factors that were involved into it. But generally, I want to say 40-60 was like 60 was this, 40 was the rest. And it looks like it moved over, like I said, because it adapts as it goes. So it actually, if you want to move it to the correct position as of now, you can say it gets better there. So now it's sitting at the 30th, which is pretty much the end of the month when it starts to ascend. You know, Not sure how high it's going to go, but we can look at that on other things. Like, let's see here. Let's bring up book map, right? Now, here's a story. that I was involved into when I was first, like, understanding how bookmark works and stuff like that, and its data and how the tool operates, how the operating program works. Um, so back here at $5, and we also had it at like $5.20, $5.04. Like these zones right here, here, and here, right, were like the highest um, zones of supply. So it had like, was it like 800K shares here, 300K shares there, and 300K to 400K shares here, right? And then as the price started going down, okay, it started moving down with price. So basically, it was pressing down on it like a press, I guess you could call it. It was pressing down on it. The price, the liquidity, the fucking supply started moving down and moving down and moving down, and it continued doing that to around $3.50, and it kind of stopped, paused, and then once we broke underneath $2 and the $2.80 became resistance, it moved from 350 down to $3, and then started slowly making its taking more supply and slowly making its way down, descending, right? As it was press, as it was constantly putting pressure on it, the price didn't want to go no higher because there was so much fucking supply above that it was basically putting a cap on it, right? It was pushing it down because it couldn't get there was not enough participation or buying. Um, so it continued to push it down, and then like we could go all the way back to a few days prior tense and see the same structure with the order book, right? Here, here, and here. Okay, but that's not the point that I'm trying to get to. I'm just looking at the today's action. So if we go past, because $5 is not even relevant anymore, it's going to be $3. That's the um, highest zone of liquidity or highest zone of supply, which is going to be damn near 300K shares. Some of them got absorbed. It had to because it originally had like 800K shares. So if I add all these up, I don't think it's going to break the 100,000. What is it? No, is it the 300K, 300K, then 800K. Yeah, it's like 13. No, 130,000 shares. Yeah, I think that was the grand total that it had of supply. And it started making its way down, like I said. And now the highest zone of supply is going to be around nearly 300,000. So, and then it's some of it's spread out across the board, um, not significantly. You got about 100K or 100,000 on $5. So yeah. As we move closer to the most extreme zone on Clover, we can see that in order to even come close to having a breakout, it's going to either have two things happen. One, this supply is going to vanish and move to a different area, right? Or it's going to be absorbed. In order for it to be absorbed, we can't go down any further. So we have to absorb the smallest parts first, which is going to be at this point in time $2.50 and $2.70, and then $3 as the highest point. Um, Now, if we do it in reverse, right, we say, hey, ain't there demand zones, right? Unfortunately, not. There hasn't been any demand zones after $2. I think the last demand zone that I've seen on here on the order book was like at $2 and something cents. After that, it kind of like completely, was not relevant. I mean, look at it. So we're at like 20 cents. There's absolutely nothing. There might be a tiny bit right here at $1.50, a little bit, but there's really nothing. And I went through the dark pool data, and around $1.80 where most of it was stacked at, right? The dark pool data with the volume was stacked at around $1.80. So this is where the fair value gap at, the dark pool data at, the book, the fucking order book at, and then technical analysis all comes together, and it tells you, and then options data as well. It all comes together, and it tells you that this is going to be the most significant point, because if we can't hold this, then we're possibly looking at the lows of what $1.20 in the not too far future. Um, at least that's the conclusion I come up with. I also plugged it into ChatGPT. I'm gonna let ChatGPT explain some things here in a few minutes. So yeah, there's absolutely nothing down there. Highest zone is here. If you guys, like if you're watching this video and you like, like what you see, I would suggest becoming, a member to Bookmap. Right? I don't I have no connections with them whatsoever, but they're pretty awesome. It's kind of like TradingView. When I put TradingView up here, I don't have no connections with them, but they're pretty fucking awesome, right? And I like them. So, and then after we break the $3, absorb that. Now you gotta. I ask myself, at what price level would it be fair to suggest I could absorb the $3 for that amount, right? How much? What how many shares would I have to own at a certain price in order uh, to absorb all of this and not destroy my average? How low of an average would I have to absorb all of this, right, and not damage my average? That's a good question. I got to figure that question out. Now, that's something I was thinking about, something I wanted to share. All right, so that's that. Um, we go back to TradingView and we look at it again. Um, so yeah, this is either going to be accumulation, and accumulation, which is typically late accumulation, because this in itself, from here to here, this zone within itself at around, I don't know, $1.80 seems like accumulation to begin with. This, did I say? No, I said $1.80. I mean, 95 cents. I'm looking at the wrong line. All right, so 95 cents, or you could all push it down to say, hey, it's like 85 cents. But regardless, within this area, right? This is what I would call the pre-accumulation. It's probably here, maybe even a little bit there, right? And then you had probably accumulation, but it was like, I don't know, slow and low. And then you had this happen here, which is going to be late stage accumulation. So this, if that's correct, right, then this also is late stage accumulation, which means that this is also late stage accumulation. Now I'm hoping, right, that this action right here is the beginning of a spring, right? Now looking at the cycle analysis, right, adjusting it, because I think I had it right about here, which is going to be on the 25th. And I adjusted it in my previous video, if you watch that. So it's like the 25th, and now I'm adjusting it here, saying that it looks more like the 30th. With the Hertz cycle analysis, it looks more like um, April the 6th. So, given the fact that some of these bars were actually lower on the selling volume, this one kind of went up. It makes me think that there's a higher probability now compared to the way it was over here. It's higher here, you know. But that's yet to be seen. It will deny that. It will completely destroy the thesis of accumulation. Like it says, accumulation it will evolve into distribution if we can't hold this. And there's a highly, in my personal opinion, with my due diligence stuff like that, there's a high chance, it's highly likely to see the fair value gap on the weekly chart that goes down to the center was like what, $1.30, and then give or take, or something like that, 10 cents. Um, it's highly likely. So mhm. Now my psychoanalysis on individual time frames here, right? These are the lower time frames. You got like the 8 hour or the 3 day and whatnot. When they all come together simultaneously, right? And have like this big oversold zone. That's significant when it ties into the rest of the data. So right now we are, this was an oversold zone for the shorter time frames, like the 8 hour and the 3 day. This is an oversold zone with the higher time frames, like the 1 week and the 2 week. Um, and I don't want to get into months. It's like, wow, if we're still oversold in the monthly graph, right, or the monthly cycles, then that's wow. That's a big wow. I can't believe we went down that far. It's possible to show up. I might have to adjust it if we go down to like $1.20 and put up the monthly rather than the weekly and the 2 weekly. But nevertheless, this is what we have right here, right now. Now let me show you what I mean. What distribute? It could be distribution. I thought my thesis is that we were in accumulation, given the fact that fundamental analysis suggests that prices should never be this low, right? So we can do a fundamental analysis study later on. I don't really know if Albert is down for me posting, fundamental analysis using his software, shit like that, because it's kind of like he kind of feels funny about that kind of stuff. I got banned because, I talk too much, I guess, or whatever, um, from his Discord. But it's nothing. It's nothing serious. It's just because maybe I know something that he doesn't want me to tell the group. It could be that. Like when I told the group that we could see $1.80 pretty soon if the TA continues to say that it's going to happen, right? And it did happen. Hell, we went down to, what was the low of the candle today? The low of the candle was $1.78. So we went lower than my expectation. I thought we were gonna bounce. I thought we were gonna have like a hammer stick candle or a like a fucking dragonfly candlestick right off of the fair value gap that existed right here until it was no longer valid because it took it back. So it's poof, it's gone. Um, so yeah, let's see what it looks like when distribution is at work. Okay, so this was the all-time high, right? This is like the $20 and yeah, $28, right? So this is all-time high. Now the signals do go off for buying because technically it's like extremely low and it's a good area to purchase at, right? That's the reason why the signals play out, as well as the oversold area. But things could be oversold for a long time, and they could be more oversold and more oversold and more oversold. So that's the reason why it's not written in stone. It's an area of interest that if you were fundamental, bullish, that this would be the area you would want to buy for the long game, right? But it also indicates distribution when nobody's buying because the price continues to go down. So we started off before like major distribution started kicking off. We started off at like $7.60. I remember that price. I thought, man, we're gonna bottom out here. We're gonna go up, and then probably go higher than this. But it didn't happen that way. So we had these fair value gaps that were acting like resistance here, here, and here. Didn't want to break it. It tested it right there. It took it back, right? Then we had a fair value gap here. It tested it right here, right? And then went back down, retraced, and then it just continued fair value gap after fair value gap after fair value gap, right? And all of that is resistance. And it does show, the signal if you wanted to purchase, right? Um, but it was all distribution. That's the reason why the price kept on going lower. And then it had like probably a short squeeze. And this is where Shamat sold and got out of, he calls the losers, right? So he got out of it right here and sold there. And you can see there was a big sell order there. Well, as maybe a couple here. There was a buy there to help it go up, I guess, or maybe shorts to cover, and that's the reason why it showed that there was a bullish divergence. You gotta, in order to confirm the divergence, the price has to go higher than the previous low that it had in order to create the divergence in general, right? So you had one here, it went up. You had one here, it went up. I think this was like a shorts, taking locking in profit, right? So and then after that, we had a massive fucking dump again, right? Another distribution phase, and then like a dead cat bounce, and another distribution phase, until it became a accumulation phase. And that's how that shit works, unfortunately. Um, so now where we're at, right? You see, it never had any of this like orange or red over here whatsoever, right? Because that's absorption. It was like triggering absorption. Price was going up. You got bullish absorption and bearish absorption. It's not labeled as how you have distribution and accumulation. It's not labeled. It's absorption is absorption. It's either bullish or bearish. So you had that. You had all this absorption that you could tell by these fair value gaps going up, 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 right? This one right here got destroyed, so that's where we're currently at. It broke through it, so it no longer exists. Um, and you can see psychoanalysis says that we were overbought, right? You had this dark zone, which was within the daily and no, the 2 week and the 1 week. And then this was the daily and the 3 day there. So it's kind of like, pinpoint accuracy. And when you get them all to line up together, right? Topping, topping, topping. You have this. And then, down here also you have, if you have the accumulation, you have the distribution, right? You got the, the institutional buy, then you have the institutional sell, right? So it's like the vice versa. It's yin and yang down here. Um, and then you can see how it kind of dropped off. So stacking, 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 and then it just went right there, right? That was it. It was done. And it stacked, 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 and it dropped. Like there's nothing. Let me go over here. That's it. It's nothing. Like it's not increasing anymore. It's dropped. So then you have this signal there. Then you had an overbought here with the daily and smaller cycles. So yeah, that's me explaining some of that. So now the expectations from Futurecast says it's still patiently waiting for some type of spring to happen. The longer one says that shit, we got until like the middle of May. And some of the shorter ones say that there's a chance that it could happen now. And then you have this purple one that suggests that it probably won't until somewhere in April. So if you tie that into these, then I would say this could probably, NA these quicker ones that want to move up. Then since you eradicate these that consumes that, This one is more substantial. Um, the purple one tying into the wave tech as well. So, you add in options and you add in seasonality, right, into the mix. It does kind of speak the same language in April, as well as the Hertz psychoanalysis, right? It's lining up there. So, my outlook for this, as I said before, my last video, let me get my drawing tool out. I said it was going to go kind of like sideways for a little bit, drop down, and have a spring, move up, go sideways, and then start going up. Originally, this was further here, like that, I believe, or no, right on the day itself. I gotta go look back at it, but it was somewhere in this zone. Um, where I expected a spring to be. But now adding in a different psychoanalysis on top of everything else, it looks like it could be in between here. When you look at the end of it on the wave, so you could say maybe here. So it really needs to go up and then come down one more time and then have a spring. At least that's why I'm interpreting the data. I could be wrong. And then if I am wrong and this is not the case, we're not in an accumulation, then let me get my drawing tool out. You see right here, there's a fair value gap and a resistance on an order block. So it's possible that we could see a move down soon, pop up, test this, come back down, break it, and completely destroy that thesis. And kind of cycle down to maybe like right there at around $1.30. And that'll take it all the way out to June, beginning of June. Let me make sure I tied it in these cycles correctly. That's an uplift. It says there's some uplift there, so that should be a topping zone. And then there's an uplift here, so that should be a topping zone, not a bottoming zone. So let's see here. Let's do it in a different way. So if it does that, right? Say it does something that's kind of similar but not right, and considers that to be possibly something similar to that on the way down. Because you see this center line right here? This means, like bearish below, bullish above, and it's spending more time on the bottom than it is on the top. So, yeah, this is the line in the sand. Um, Either we're going to hold this zone and it's going to be accumulation, or we're going to consider this zone resistance. And this whole fucking thing from here, or the whole damn thing, call it all the way back to there, from hell, maybe even right, yeah, $4. We'll say this whole thing. Let me get my trend line out. Trend here. This whole thing, right, was distribution, not accumulation. So if this is not accumulation, then this is distribution. And if that's distribution, and we see that level as resistance now, the next area of interest for me on my TA is going to be around $1.30, give or take 20 cents for margin of error. Probably right there ish. Right. So that's going to be around June the 2nd. We should see some form of relief though coming up, because it's not going to continue just having this all the way through. At least the data tells me that it's not. And another thing too, you see this bar zone from here to here. I went ahead and took the measurements from the accumulation zone that it had here, the late stage accumulation zone, with this one also, if you call it that, and it would validate it with this being it. So there's an average accumulation time frame that suggests here by April the 8th, it should come to an end, right? Just with how long it takes on average. So we have that. Let me get rid of this. Seven, that's pretty strong compared to that five. But yeah, there's a lot of liquidity, like I showed you before on the order book at $3, and then there's some at like $2.70, and then some more at like $2.50, I believe. Right here. Now, within this whole zone right here, all of it. So yeah, that's that. Now, like I said, I did plug it into Chat GPT and the due diligence. Let's hear chat out and see what it's got for us. Let's see. Hmm.
Good. Let's strip the noise out and speak like this is being presented in an investment committee. Clover, Structural Market Framework. 1. Phase 1, Distribution Markdown, completed. After the $4.80 region, the stock entered a clear distribution phase. Characteristics: persistent lower highs and lower lows, repeated rejection at resistance, liquidity stacked above price, downward momentum with follow through. Interpretation: institutional supply dominated. This was not ambiguous. This was a textbook markdown phase. 2. Phase 2, deceleration transition, mid-range $2.50, $2. As price approached the 2 zone, observed changes. Selling pressure slowed, volatility compressed, price stopped accelerating downward. Data alignment: no spike in short aggression, volume normalized, no capitulation, early signs of absorption possible. Interpretation: this was a transition zone where distribution could evolve into accumulation, but not yet confirmed. 3. Phase 3, accumulation attempt, unconfirmed. This is where the accumulation thesis was built. Supporting evidence: dark pool activity clustered around $2, stable short interest, no aggressive increase, low cost to borrow, no forced covering or stress, options pinning around $2.03. Bookmap showing liquidity repositioning, not removal. Important clarification: price structure remained weak throughout this phase. Interpretation: this was not confirmed accumulation, it was an accumulation attempt within a broader downtrend. 4. Current phase, structural test breakdown risk. Price has now interacted with and briefly moved below the $1.80 level. Current observations: price, break of prior support, $1.80, continued lower high, lower low structure. Options: increased put activity near $2 and below, downside hedging becoming more prominent. Short positioning: gradual increase in shares on loan, cost to borrow remains low, no stress on shorts, utilization rising modestly. Behavior: weak bounces, selling pressure exceeds buying response, No evidence of aggressive demand. 5. Interpretation of current state. The market is no longer in a clean accumulation narrative. It is now in a decision zone between accumulation confirmation and structural failure. 6. Forward scenarios. Scenario A, accumulation validates requirements. Reclaim of 185, 190 cents, sustained holding above that range, expansion in buying volume, reduction in downside hedging pressure. Implication, the recent move below 180 cents would be classified as a spring shakeout and accumulation remains intact. Scenario B, accumulation fails, increasing probability. Conditions, price remains below $1.80, continued formation of lower highs, weak or absent buying response, expansion in downside volume. Implication, the prior accumulation was not accumulation, it was passive distribution or failed base formation. Expected continuation, move toward $1.70 or lower, repricing into a new lower range. 7. Key takeaway, institutional framing. Open quote, the stock exhibited characteristics of a potential accumulation base near $2, but never confirmed structural strength. The recent break of support places the thesis under pressure, and the next phase will determine whether this was a shakeout within accumulation or a continuation of the broader downtrend. Close quote. 8. Clean summary, externally shareable. Club declined from $4.80 in a clear distribution phase. As it approached $2, selling slowed and conditions suggested a possible accumulation attempt. However, price never demonstrated strength and remained in a downtrend. Now that the stock has tested and briefly broken $1.80, the market is at a decision point. Reclaim and hold above $1.85, accumulation confirmed. Continued weakness below $1.80, accumulation thesis fails.
So yeah, thank you, Chat GPT. Um, Everything it knows is because I know. So yeah, like I said, if we go to the weekly, we look at the fair value gap. That's right here. Uh, we could see if this shit breaks, right? We could see it come down to here in this zone and oscillate between there. Maybe even go lower, consume that, and then try to regain it if it doesn't regain the 180 level. So yeah, but we're only looking forward for more downside. Downside risk is extremely high, um, but at the same time, you know, buying is also at this price level with the signals. Buying is I would buy, right? So, but not all at once until I see some type of confirmation of some support being made on the daily chart for the price. Yeah, so that's my window. I got the window on the Hertz cycle analysis, which is going to be anywhere between what's that? The 20th of March to the 6th of April. And then this one, the wave text suggests that by the 30th of March, we should start seeing some type of bottom already formed or in formation. So if we go look at the seasonality one more time, see if I can bring it up. No? Yes or no? There it goes. Okay. Was it at seasonality? More seasonality. How I like to do it, I like to get rid of. I like to get rid of that lines. Show the graph, right, and then seclude it to somewhere that it's no. It's not so much damage done. Like when the stock was trash, somewhere where it found the bottom. Started working its way around. So if you see this zone right here, this zone has been more green than previously before, and we could actually tie it into like Humana, right? And say instead of that, we do 10 years. Oh, this is not healthcare. So we say 10 years, right? So that's going to be this 2016, 2026. And then you can see there's 7 out of 3, 9 out of 1, 7 out of 3, 6 out of 4. So like this time frame right here is supposed to be positive for the healthcare industry. We look at Molina, and then we're gonna go, yeah, 10 years also. Wait a minute, 2026. Okay, there, right here. Yeah. So we look at this. You got 7 out of 3, 6 out of 4, 6 out of 4, 4 out of 6. It's not that good. 5 out of 5 is break even. So it pretty much like it's like June, July, and August, and maybe September, and then it kind of fades after that. So like that's that. And if we go to Oscar Health, how long have they been around? Ugh, not that often. We're doing like Clover. So Oscar actually has a cycle that starts off really early in the year, but it actually hits something worth having um, in May. In May, that looks like it. Okay, so we go to Alignment Healthcare. We got to go back over here, and this one's more like towards the later half of the year. It looks like it likes to be after Clover Health. So it looks like Oscar likes to be before Clover Health, and then you get Clover Health, right? And then you get Alignment Health at the end of the year ish. November is a good month. Uh, 4 out of 1, 4 out of 1, 3 out of 2, 3 out of 2, 3 out of 2, 3 out of 2. So it's kind of like break even there. But yeah, it's still it whooped ass right here in November. So you kind of like say, well, it's wake as fuck over there. So maybe September, October, November. So yeah, it's like afterwards, and then it's like um, Molina, Clover Health, and then Alignment Health. But then you add in United Healthcare, right? And then you got the 10 years, right? So you got 9, 6 out of 4, 3, which is trash. That's okay. That's trash. This one's good. That's great. That's good. That's really good. Or really good, really good. Good. So good, really good, great, good, and trash. So yeah, that's back to charts. That's going to be seasonality. So yeah, given all the data, right, with seasonality and other healthcare companies, dark pool options, all TA analysis, right? We're technically do an analysis on Clover Health, right? Through all different types of technicals, right? Dark pool, the options chain, fucking trading view, fucking book map, fucking like all of them, right? That I can get and analyze. Um, it suggests if we don't hold this, we break down, we might just have an accumulation phase when there's supposed to be an uptick in price, which means that go back to here seasonality, which means that back over here should have never left. Um, Regular yes, which means that come on, you sucker. This zone right here isn't going to be an uptick in price. It's going to be an accumulation zone. And then we might just have to wait till the next year cycle, in order to see any gains. If that's the case, if this is going down, this was distribution, this is going to be accumulation, it's not going to be absorption. There's a difference between accumulation and absorption. Accumulation, they buy low, sell high. So they're going to buy low. So the price is going to stay low here, 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 and here. right? And then it might just go sideways. Wait for the next year to come up, right? Maybe somewhere down the line it has like some kind of uptick here and here, right? Because there's three there, and then you got a, one out of two here, so might have some kind of uptick there, and then go back into another accumulation phase before it has an uptick in price in 2027. Maybe, I don't know. We'll see. That's my thesis. If everything, turns out to be that way. Back to charts. So yeah, spent about an hour on this video. That's about good and that's good enough. Uh, we're gonna look back at this in a couple years and say, hey, was this guy right or this guy wrong? It's documented. There you go.